Hi everyone. Today is September 17th. Let's look at the Bitcoin. Let's start with 1 day time frame and then we'll see higher time frame. So this is a Binance version that we follow on 1 day time frame. So this particular chart is also the chart used for Bitcoin updates, which is like intra-week update that you see. Okay, now we'll start with the innermost pattern and then we'll zoom out and see how it is shaping up. Okay, so um, there's no complication. My TA is sometimes rather simple. There's nothing major that major thing that I would add which will complicate the understanding. So simple thing is I see a symmetry here, and that symmetry of this pattern tells me that this could shape up like this. Now the angle could be a little different. As it develops, we can fine tune it, but this depiction indicates that we see a rise, then some kind of consolidation, maybe a dip. So this can be slow moving up, upside move, and then consolidation and a breakout, and then there's some rest time somewhere here, right? And then again dip, or maybe sideways consolidation like this, or it could be as deep as this much. But here the price level is not important. Here, this is a potential path that we have depicted. So the shape is more important. The first and foremost thing is the direction. The direction is up, and this is a wavy structure. So it's not like going to be a vertical move, in my opinion. It could be like this in a zigzag manner. And once it is developed, we'll see some nice symmetrical pattern here. Okay. When this pattern would fail, that is also need to be known. This pattern would fail if it breaks below 18,700, which is this line, this support line. We can say if it breaks below this particular September 7th low, closes below, not just spike. So one scenario could be, there can be one more dip. Okay, there can be so many scenarios we could think of, but I'm not depicting that scenario here. But let's say it could be one more dip on the downside and then follow this structure like this. Okay, and so on. This is just an alternative route, but more or less it's the same thing, right? Rather than going from here on, it could dip. Why this could be a dip? I think on Tuesday is something, that Tuesday is FOMC meeting, as you know, the Fed meeting. And Fed is the market mover, not just for crypto, for entire capital market, as you know. Um, so 75 basis point is being talked, but some analysts are saying, or economists are saying, there can be 100 basis point rate hike. Now, if that happens, that will surprise the market. And in that case, it could dip. If it is 75 basis point, in my opinion, the market has already absorbed that. Okay, this is again, I'm not an economist, and this is little beyond TA, but I'm trying to mix up certain things which are essential. So TA doesn't care about all this, and I don't get into all the major fundamentals, but the Fed related stuff is the most important and driver, as you know. So it matters. So that's why I would pay attention. So there are a couple of key things, fundamental data points, which we need to refer, right? So that's why Tuesday, if Fed surprise the market by hiking like more than 75 basis point, then we might see a big dip. or quick dip. And in that case, the worst thing could be it can go deeper and ruin this pattern as well and go deeper. And if that happens, we'll have to analyze as long. So again, then this is our last resort. So last time I mentioned about double bottom scenario, in fact, 3 weeks ago when it was here, that we are likely to see double bottom. And double bottom could be somewhere here. It could be right on the bottom, like this low, 17K low, right? It could be a little lower than that, a little lower, which happened in past, as I shown to you, like here, if you look at this, right? This was little lower, this was little lower. I'm talking about lows, okay? And this was even closing. So this kind of a, this was triple bottom, so to speak, right? Double bottom, triple bottom, doesn't matter, but it's more like, we will simplify this is double bottom because the height was not so much. So similarly, we have this consolidation going on, right? So this could go down in that case up to this one. I'm talking about if there is bad news, okay? If Fed doesn't go and goes with 75 basis point, in my opinion, in that case, it should not happen. So at this moment, we will just stick to what we have, which is this path, and we can expect it to progress along with this path, okay? And if anything changes, we can always correct and reassess, because that's how it should be done. Nothing is set in stone, but until that happens, we can take a position, and this is our position, that the direction is up and this is likely to be the path, okay? As simple as that. And if anything changes, we are ready to incorporate that change and redraw it. So come Tuesday, be watchful, okay? Because that's the most important day. Okay, so if I we can draw one more. So on we can draw one more line, and then you may say somewhere here it is likely to consolidate. Okay, maybe we can draw a circle there. Orange circle makes sense for resistance. Okay, so somewhere here. So this is something we will have to keep in eye. The pattern could change from here as well sometimes, but if it changes, we'll update it. At this moment, what we're expecting is there's a slow progress from here on, and then another checkpoint. So each resistance is a checkpoint. Remember, sometimes people misunderstand that the resistance is a point of rejection, that you're supposed to sell on resistance. No, you're supposed to check on resistance as a trader. Okay. Similarly, supports are not something someone has to buy because it hit the support. Support is another checkpoint. So everybody can have different style. I'm sharing my style. Okay, so it cannot be the style. It can be one of the styles. So if it works, anything that you are using, if it is working, fine. My style is, I would set an alert and see what happens. I would not try to rush and sell on resistance just because it has hit it. Okay, there's no need to hurry, because if the coin has momentum, there's resistance. Those who are on the channel, I mentioned there are three types of behaviors that you observe. First one, when it is full of strength, you see price pauses at resistance, okay, and kind of move sideways, but doesn't leave the resistance zone. Okay, maybe little here and here, zigzag, and then shoots up. Okay, that's where it is in momentum. So it has to respect resistance, but not for long, and then just goes up and break out. Okay. Second type of behavior is where it retraces, but retraces in a limit where it doesn't break the trend and then goes up. And the thirdly, a resistance could be a point of reversal where there is a major trend reversal happen. Which one? The one which is like this. Okay. So this is a trend reversal. So these are the three behaviors. So at resistance, trader need to use that as checkpoint. Support is a checkpoint. Resistance is a checkpoint. So this is very important point. Never trade based on assumption. People assume, I have seen it, I'm not hypothetically saying, people assume that this is going to happen. This is your bias, trader's bias. And this is, it doesn't help. You have to see, that happening. Then only it makes sense. And not to try for a perfect exit, not to try for perfect, buy on a support and resistance, because that's not the goal. Because if it doesn't work all the times. So if you try to sell, yeah, sometimes it happens that it corrects, but not necessarily change the trend. So you might feel that, oh, I should have sold. So it's your choice, but you may do in and out, but you may not be able to get back in. So for an example, you may be able to sell hypothetically. Okay, here it goes down, fine. Then you feel happy that, oh, I sold, but you might not be able to time when it starts moving up, because it might happen when you're offline, and you might feel that you left out. And not only that, um, such in and out is also exhausting unless you have a lot of time, and unless you're a full-time trader. So I cannot generalize, but I can generalize one thing, that not everybody is full-time traders here. So assuming that if the trend is good, it's better not to touch, not to do in and out. Okay, not an advice, but my experience. Let it go, and only think about exiting if there is a threat to your capital. So here you get information, especially if the Bitcoin is healthy, nothing happens to alt. So that's also reality, right? That's also, that. So this important point. So if we'll talk about alts, um, so and another point I would add, don't be sensitive to intraday movement. It is noisy and again confusing. Again, it depends on how much time you have. If you're sticking to your screen all the times, then you can afford it. And even if you afford it, you cannot afford for a long time, because there will be impact in long run. You can do it for a week, month. If you do it for a year, you'll start seeing the impact, because this is 24/7 market. If you track on hourly basis, like 4 hour chart and all those things, it is exhausting in a long run. So it's not healthy. Okay? But it's your choice. Ultimately, if it's working fine, good. But in majority of the people, I would say just track on a higher time frame, like 1 day and higher, and see if the Bitcoin is healthy. Don't worry about everyday movement. They do well if the Bitcoin is doing well and the trend is good. Okay, and weekly update will give you more in update. I mean, will provide more information on how they're doing as far as their health is concerned. Um, Often traders lose for I mean, for many reasons. There are different reasons, but this is one of the core reasons. They do in and out for no reason, unnecessary. Okay, so you may keep in mind. It's up to you. So this is very simple. One day pattern, right? There's no need to go lower. It doesn't make sense. And as I said, Tuesday is important. Let's look at Bitstamp. We have Bitstamp where we have a weekly pattern that we're following. Let's check where it stands. Just a quick recap. This is the first leg, consolidation, and then second leg and a consolidation. Now, come next week, it is possible because now I think we had to add one more arrow. We didn't add this arrow last time because we had a nice green candle. Now, because now we got this red candle, we had this arrow, not not that we expect it to follow, but because we don't know the future, we have to prepare for a potential downside move. So we have to add it. See, last week it was not needed. This week it is needed. Okay, so I would add this, and we have to keep in mind because this is a weekly call. We don't know what might happen in a week, so that's why it is important. And bit unfortunate that it has come, but a good thing is it has stopped here and trying to bounce, right? So it has touched the red line, not quite close below it, or when it didn't go below and it didn't close below, it touched. So that's a good news, right? So this depiction is from the last week, and there's no change to the drawings as it is. But this time we have to add just in case next week this bounce fails and it tries a new low and closes, then I think we have to be on alert for sure, right? Because in that case, this particular low will be in trouble if that happens. At this moment, we don't have to think because it's not happening. As in when it comes to that point, we have to consider. But yeah, as far as scenario is concerned, we have to depict this scenario this week. Right. So happy scenario is obviously there are two checkpoints. So we look at the checkpoint on a 1 day time frame. It is different. On a weekly time frame, it's different. There are two checkpoints. One is at 27K, another is 32K. Right. You may say this is the first approval and this is the second approval. Right. First approval will tell us that okay, now there's no risk that what we are seeing here. The second approval is a green light for the all-time high. Okay. And that's why you see there are two branches. Even after reaching here, it could come down. Even after reaching here, it could come down. So unless and until we see it closes above 32K, we have to consider that the risk level will go down significantly, especially over here, right? So we may say the probability of this is very low. We may show that as a small dotted line or whatever. Yeah. I don't want to complicate it. Dash one. I think this is close to the like this. Right. So this is simple. And the if it goes below 17K, the next one is around 15K. I don't have support line, but as soon as if this scenario triggers, I'll add. There's support at 15K and there's another support at 13K. But I'll try to come up with more accurate number as and when before it goes to that level when there is risk. At this moment, we are not thinking about it. Probability is low. Okay, but if the probability changes, then I'll update you. At this moment, we're looking for upside the recovery. So this is a recovery. Another point that I would like to clarify is people often think in terms of bull and bear. In reality, there are four phases. Okay, there are two crossover phases. You may say reversal phases or crossover phases where it's like a U-turn. If you are driving and there is U-turn, you slow down, right? If you fail to turn, then it goes, in the tangent, right? And if you're successful, then you change the direction. Think about it as like your driving experience. So that U-turn, that junction where you take U-turn is the crossover phase, okay, or a reversal phase. That is not, that is neither bull nor bear, because that's a transition phase, correct? So this is where we are. And people think that this is, so they try to depict black and white picture. In reality, it's a gray picture. And it is not that we don't have clarity. We do have clarity in terms of levels, but in terms of direction, it depends on which side it weighs more, right? So right now it is in equilibrium, but the equilibrium could change if it depends on the price action. And we know the critical levels where the equilibrium changes. For an example, these are like one of two approval, then this is two of two approval, right? All the approved. So that means this from here on we can say the bull takes the control. And you know that this is 17K is here. And if it closes below 17K, then the bear takes the control. So we have the boundary, and we can say that at this moment, we should not take any hard stop, keep our mind open. It's not that we're confused. We have the clarity in terms of levels. And right now, I would say we are neutral for a reason, because we are neither above this level, neither nor below the 17K. So there's no need to take extreme position. And saying that we are in a crossover phase is actually a concrete position. We know it. It doesn't mean that one has to be sidelined unless someone wants to be. One can start taking trade in specific direction where we have a bias. Right now we have a bias on the upside. If situation change, we'll change the bias. That's not a problem. But everything that if we are taking a side on the upside, let's say at this crossover phase, we always take a side with a condition in mind. Some people take the side without any condition and they stick to it. And what happens when you do that? You're kind of a closed-minded as a trader and not able to reverse your position quick enough. We have to be adaptive and reflective to the change, right? And that's what we do on opportunity channel here, that we will take the side, of course, but it will be conditional. And these are the two conditions we have. And then there is a condition on the downside we have, right? So once we do the trading, this is planning. It is more mechanical job. It is more plan oriented action rather than emotion driven, trading. And that makes the life simple. And if you're operating on a weekly, your life is even simpler than those who operate on one day, right? Higher you go, you get more clarity. Higher you go in time frame, you get a late confirmation. But once you get confirmation, you're not going to be fooled. If you go lower and lower, the chance that you have to do in and out is higher, because the price action, because it can swing here and there. So each trader has to decide, am I someone who would operate on 1 week? Am I someone who will operate on 1 day? It can be 3 day. It can be, but if you are on an intraday, yeah, daily, then you have to be careful. You may go up to 12 hours, in my opinion, just as a checkpoint. It's important because price sometimes move a lot. So 12 hours um, is important. Yeah, if coin is pumping like 100% and all, it's okay to track at 1 hour, but that is something for quick in and out. We know that's totally different. That's a pure intraday play. Okay, and not everybody is able to ride. And our focus is right now on this one is trend. Our focus is longer term, medium term, whatever you want to call. But our focus is swing trading here, not intraday quick in and out. So for various reasons. So I hope this explains. So anything changes, I'll update you on BTC updates that we have on Discord. Right. So I think we can zoom out and see the monthly just for just to see how it looks like. Of course, this was very encouraging. This is disappointing. And then this is more like a survival. Um, it's not scary at this moment. The month, it's like we are middle of the month. One big push could change. Yeah, if it breaks below July level, then I think we should be worried in a sense. I mean, not too worried. We have to change our direction to mm, down. There's nothing to be worried in any case, because once we are prepared, we are not worried. Okay, I think the right word would be disappointing. We would be disappointed if that happens, but nothing to be worried, because trading is has to be fun, and if trading is stressful, then it's useless, futile. Okay. If trading gives you pressure, then that trading is of no use. Anything for that reason in life. Why to do something which give you pressure? And the mainly the pressure comes when the size is big. I've been saying that, and I'll keep repeating whenever I get chance. If one has small size to start with, there's less pressure than someone who starts big, assuming. And it's not going to the moon. People talk about it. Sometimes you hear the tweet, this is the last level you have to, this is the last time it is going to see the 20K. Don't listen to them. I mean, I'm sure you're mature enough, but sometimes there can be new joiners. So I have to repeat certain things. That's why I'm revising few things, that those people are just trying to excite people. Trading is not like that. You don't need to be. It's not going to the moon. You will have enough time, plenty of time. People don't understand that. It's not that if you don't buy this week, you're going to be left out. No, you'll get enough time. Gradually, you just add as it rises. If you follow that approach, you will never regret without. So the trade has to be profitable. My mantra is trade has to be profitable. Not every trade can be a win, but if you lose, you should not lose your capital. So you are out of the game. Make sure you are in the game. When you take risk, you may take risk with the profit, but don't try to gamble with your capital, because that's hard-earned money. Unless you won the lottery and trying to, spend, that's a different story. Or if you have gotten by some free money from somewhere like inheritance or something, I'm just kidding. But and if you want to blow up, then you may try that. But I think risk has to be increased, in my opinion, only when the profit increases. This is very important. People take risk initially, and I say take risk later on. There's a difference. At this moment, people assume that if this is the cheapest price, if I don't buy, then I'll have to buy at a higher price. This is true, but what they're not considering, what if it doesn't go up but down? So you have to put together that it's cheaper, but you have to see that the risk is also higher compared to 32K or higher. So the combination is the price and the risk. People forget about the risk factor and just go by the price. That is, I think, not a mature decision at all. So seasoned trader would consider risk first, because they know that if the coin can make new all-time high, and it doesn't make any difference if the Bitcoin goes to, let's say, 200K, 300K, even 500,000, whatever. It doesn't matter whether you enter at 19K or whether you enter fully at 25K or 30K. It doesn't matter much in a longer run, but it matters a lot if it goes down. So one has to consider the probability of risk, and consider. So this sizing is very important. So I keep saying this for a reason. That's one has to master the sizing. Okay, so I would just repeat it. So it is reminded, and especially those who joined for first time would know that I say something which is typically not said on Twitter. Usually people try to say pump and to the moon and all in, and if you don't buy at this level you will never see this level, and I'm not going to say that. So I'm going to be someone odd in the room, which is fine. But this I think my approach may seem conservative, but those who go for it will see the difference after a year, compared to those who are aggressive and think this is if not now, never. That approach won't work, or they'll have greater stress and facing and a risk. Yeah, if it goes up without any other issue, then they may sail through, but not always that happens. So anyways, so these are a few things I wanted to convey. At this moment, monthly is still on a lower side, but not a major threat. We still have a couple of weeks, and it could recover. So that's where I'll end the Bitcoin analysis and then move into the next phase.